The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we take a look at Friday's market action, we saw plenty of pressure in the grains all week long, but Friday found a bit of a turnaround led by soybeans and soybean oil. Cattle futures also found some good strength as well. Was it just a proverbial dead cat bounce at the grain markets, though, to close out the week? We've had a very strong dollar, et cetera, et cetera. Let's talk about things. Joining us now, Mike Miner with Professional Ag Marketing is with us here on the show. Mike, it's good to talk with you again. How are you?
I'm fantastic. How are you doing, Jesse? It's been a heck of a time over the last 2 weeks.
Man, oh man, it has been. You know, we had all the events, of course, last week with the elections and a WASDE report and the Fed, and then we come in here this week, and I feel like it's a little bit of a market hangover, so to speak, from all those events. I'm good, though. It's been a lot to cover for sure, and I know it's been a lot for folks like you, traders, to track. General thoughts on the grains. Again, just feel like it was a bit of a dead cat bounce on Friday, led by the soy complex. What's your feeling in this grain trade overall this week?
Yeah, so in general, I think the soybean market, if you look really closely, I think the soybean oil first has had a massive impact on soybean futures. I don't think it's a coincidence that the days we've sold off here recently on soybeans are the same days that you've pulled, 7% or so off of the palm oil market and soybean oil market. So to start off with, I think that's a pretty good comparison, or right there, right then. I think that's a good baseline of soybean market is moving because of that. And then two, I think the soybeans, those and the wheat markets as well, we're back off to old low levels. We've probably got a bigger Brazil crop coming at us. You've got tariff concerns now after we got excited that Trump was in. Now we've got some time to reflect on those concerns as those headlines start popping up already. And then just burdensome supplies for both of those grain and oilseed markets that we're going to have to get through. So the ceiling seems to really be lower and lower and lower here as we bump up against that, because we've just got too many of the darn things around, Jesse.
Well, thinking about some positive notes, I know export demand to some degree has been fairly good still. Maybe some countries front running when President-elect Trump takes office in January. We saw weekly export sales numbers Friday morning, delayed a day. Those look to be strong across the board again. Corn and beans, though, in particular. How much is that export demand at least keeping us from completely falling out of bed here, so to speak, Mike?
So the soybean market, those exports were pretty poor when we first started this marketing season in September. We were probably like the third worst sales on soybeans out of the last 10 years. So not very good. Now we've pretty much caught back up into the middle, five, kind of the number 5 type area. So very average. So we've been increasing on the soybean export side. So seeing some improvement. China's kind of buying, but nothing really past January. They want to see what happens with both the Brazil crop coming at them and then our administration as well. So, but that's coming up quick. I mean, January, if you got to load a boat and it's got 20 days to get to China from here, I mean, that's going to be, just in a couple of weeks, they pretty much got to have that thing loaded and on its way out. So from the soybean side, the exports have helped a little bit, but the real story is still corn on the export side. We've seen massive buying from not just Mexico, but from some of these other countries as well. So exports have been fantastic on corn to start off this marketing year. We've done a good job of stimulating demand on the corn side as we get lower into the fours here on both exports. And don't sleep on ethanol. We've had over 109 million bushels of corn ground for ethanol here for like 4 straight weeks, Jesse, and that's going to add up pretty quick. Stocks aren't really going up yet. Implied gasoline demand's probably 1% higher than last year, so doing okay there on disappearance. Margins are probably a little bit tight, especially for Iowa with the higher basis levels, so keep an eye on that. But for the time being here, ethanol exports, fantastic on the corn side on stimulating demand at these lower prices. The soybean balance sheet still just, we haven't done enough to stimulate demand there. It's a rough balance sheet.
Well, I know Jan Beans taking lead month here now. Dees corn, though, we're going to have first notice day coming up on Black Friday. A lot of people trade that December corn contract, for instance, and we just saw it with November beans. So, thinking ahead here, risk management wise, do you anticipate a lot of volatility in Dees corn here, and maybe some farmers selling if folks are inclined to make some moves here around Thanksgiving, et cetera, as we start to kind of move on some of these different contracts and things like that?
Yeah, one of the things I've noticed was this week slowed down a lot on just corn movement. Basis wise, not a lot of corn getting sold to elevators after we've started to dip lower again. Last week after we started going up a little bit, it was a little bit easier. Some more corn started to move. People are going to start to core some bins, things like that. But it's still price driven with what the market's telling guys to do. So at the end of the day here, if corn price continues to slide lower, if we continue to bounce up against like a 430 ceiling on December futures, it'll simulate some selling, but it seems like it hasn't done quite enough yet to really let basis take a break. And I think spreads are showing that. The market's starting to really tell you, hey, there's only 11 cents a carry between the D's and the March, only low 20 some odd cents to the July from December. The market's starting to tell you, hey, I need you to start selling some corn as a grain producer here in the front months. And I think farmers are going to start to react to that just a little bit. Right away after harvest, it's pretty tough to open the bin doors back up.
Mm-hmm.
Then all of a sudden now, we got some tiling projects done. We're looking forward. It's still pretty nice weather for most of the United States and the Midwest. And I could see some demand trickling or some corn trickling out, I guess, at this point. So keep an eye on basis and cash and how these elevators are sitting, I guess, going into some colder months.
Well, I just think about this too as we wrap up harvest to that end. Just revisiting your risk management strategy is so key, especially with the way that prices have been. We're looking at input costs for next year and making decisions, et cetera. Everyone's operation's different, but just don't be afraid. Sounds like common sense, but don't be afraid to take a pencil to the book, so to speak, right, Mike?
Yeah, especially as you wrap this harvest up and go look into next year's harvest. I mean, it doesn't pencil out very well at all for soybeans next year. So the farmer's going to be pretty apt to plant corn, it looks like. And don't be afraid to do something about that corn, though. I mean, if you're going to plant more acres, shift more rotation to it, don't be afraid. We should manage risk. And if we're going to plant more corn, we should do something about it then on price protection. So that's a big mistake I normally see is not taking advantage of that price that is given to you today if you do switch more acres over. And there's some decent opportunities, I think, in that corn market next year to take advantage of. The soybean market's a tough one. I mean, what do you do there, Jesse? I mean, it's not at very profitable levels today, but it's a scary situation with the tariff situation on what could happen.
Well, it's something we're going to have to watch closely. A lot of unknowns still when it comes to tariffs, trade policy, etc. Mike, I should ask you in the livestock trade as well, closing out the week, particularly cattle, finding, I'd say, a little more support across fats and feeders than I think some folks expected. What's your take on the cattle market first here as we close out the week?
Well, the cattle market's dealing with something where it's a short-term history versus long-term history. And we're in a very long 4-year uptrend that we're getting very close to threatening that bottom side of that uptrend. And so I think we are getting a little bit of buying because of that, some bargain buying. It's settled off a little bit. I think we do see some heifer retention next year potentially. So maybe beef available to consumers dips a little bit this next year. So that story keeps getting prolonged. And I think we're still waiting for that to really hit the market truly. And we haven't seen that yet. From a seasonal perspective, short term though, we normally do see cutout start to dip now. You normally do start to see cash dip a little bit. And we've seen both those things, so we've started to sell off a little bit. Makes sense. It's just, are we going to let it break this 4-year uptrend with kind of that hope or potential down the road still that is concerning to us?
How about in the hogs? A little bit quiet there on Friday, and I'd say maybe even a bit of a quiet week. I've been starting to worry at this hog market, even though demand has been good. I'm worried that futures are getting a little overbought here. What's your take in what we're seeing in the hog trade right now?
Well, the cutout's going to have to get tired of being above $100 at this time of the year. It's an anomaly. That's not common for us to hold at these high levels. I do think that the beef market and the high choice there is finally impacting the hog market in a positive demand manner. So that's one thing to really take note of, I think, on the market. And then, when you look at the crazy equity buying we've had after Trump was elected, you saw a massive record long in managed money for managed money and index funds on the hog positions. And you saw most managed money, well, indexes particularly, rolled out of the December. Now you're starting to see some fund movement. We've seen a little bit of a pullback. You're maybe a little bit worried about Mexico. Their top official, they're coming out and saying, hey, we've got some ammo too on this tariff deal. We may retaliate. So kind of keeping that in mind too, maybe hitting a little bit of resistance. But how much are we going to be able to pull December down when you're $9 off of where current index is? It's tough. So we're going to get some buying covering these short positions from the producer, and it's going to be an interesting hog market, an interesting time of the year.
Absolutely. Absolutely. Mike, if folks want to reach out to you there at Professional Ag Marketing and talk about their marketing plan and more, how can they get in touch with you?
Yeah, go to our website at professionalagmarketing.com or give us a call or stop into the office here at Laverne at 507-449-2030.
Mike Miner with Professional Ag Marketing. Good to catch up with you again. We'll have to do it again real soon. Thanks for joining us today on Market Talk.
Thanks, Jesse.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.